So today we're going to be talking about a stock split. So I had somebody reach out to me and ask me about a reverse stock split, and they wanted me to basically explain what exactly that was. And to be honest with you, until somebody mentioned that to me, I wasn't even really aware that that was something that existed. But it's very funny because coincidentally, about a week and a half later, one of the stocks that I'm invested in announced a reverse stock split. Now, this isn't the video on the reverse stock split. I decided to both do a video on a stock split, or a forward stock split, as well as a reverse stock split. So this is going to be a video on a traditional stock split or a forward stock split. And I'm going to be doing the video on the reverse one as well. I'm sure I'll upload that either tomorrow or it's already uploaded, so make sure you guys check that out. But anyway, so let's talk a stock split. Now, as an investor, when you hear about a stock split, you get very excited. Even people who don't know a lot about investing, they tend to know that a stock split is a very good sign for a stock. So basically, here's what happens. You have your board of directors, and they come to the conclusion that, okay, the stock price is too high, we need to split the stock up. Generally, at that point, they're going to put it to a shareholder vote. If you have voting rights with the shares that you have, they're going to send around basically a proxy tabloid that you're going to actually sit down and vote on. And basically at that point, you're going to vote whether or not you agree with the stock split. If the vote passes, they will then take shares of the stock, and for every share you have, they will split it in a certain ratio. So maybe it's a 2-to-1 split where for every share you have, you now get 2 shares, or it could be a 5-to-1 split where you get 5 shares per share you had. And that's not uncommon to see. One of the biggest stock splits that people talk about is the Apple stock split. I believe theirs was a 6-to-1 stock split. So basically the stock price was trading in the, I think it was a $600 to $700 range when they finally split it up, and they split it 6-to-1. So everybody who had 1 share of Apple stock, after that split they had 6 shares. So you can see splits that are not just a 2-to-1 split. You can see 5-to-1, 6-to-1 splits. So it's not uncommon to see multiple shares issued for your individual share instead of just 2. So basically, a stock split is a decision by the company's board of directors to increase the number of outstanding shares by issuing more shares to current shareholders. And as you guys know, or maybe you don't, outstanding shares is simply the number of shares held by all investors, both public and private, as well as like the institutional investors. So it's all of the shares available both publicly and privately of that company. So basically, the thing that people don't understand, or one of the major misconceptions with a stock split, is that the actual value of the stock changes. Many people look at a stock, unfortunately, and they look at the price of a stock and they determine whether or not it's a expensive stock or a cheap stock based on that stock price. The only real way to tell whether or not a stock is a value is to look at the price to earnings ratio and compare it to other price to earnings ratios of stocks within that sector. That's really the only good way to value or basically determine whether a stock is expensive or cheap. You can't look at a share price and determine whether or not the stock is expensive or cheap or a good buy or basically overvalued. So no value is added or subtracted during a stock split. Basically, market capitalization, which is equal to the number of outstanding shares times the price per share, can never change during a split, whether it's a reverse split or a forward stock split. So I have a couple of examples here just to demonstrate how this is actually accounted for in the price per share. Now these numbers make no sense. I just basically threw them in here for easy math. But let's say this company has a market capitalization of $10,000. And let's say they currently have 1,000 shares at $10 per share. Now the board of directors, they basically decided, okay, that is way too expensive, which obviously that isn't, but just for numbers' sake, they said that that's too expensive. They can't charge $10 per share of that stock. So what they do is they do a 2-to-1 split. So at that point, every person who has a share, they now have 2 shares, so now we have 2,000 outstanding shares. At this point, because the market capitalization cannot change, they now have a value of $5 per share. Now let's say they took it to an extreme and they said, oh, the stock is way overvalued, and they did a 5-to-1 split. Now each person who has 1 share would now have 5 shares of that stock. There are 5,000 outstanding shares at that point, so the share price will have a value of $2 at that point. So as you can see, market capitalization never changes. The only 2 variables that can change here are the outstanding shares as well as the price per share. And obviously you could see this going in the opposite direction. We're going to talk reverse splits in another video, but let's say you were in a situation where your stock price was $2 a share. The board of directors decided that that is too low. They're worried about getting delisted, so they basically do a reverse split. So 5 shares of that stock now become 1, and you'll see the outstanding shares lower by a factor of 5, and you will see the price per share multiplied by a factor of 5. Okay, so why would you split a stock? Why does the board of directors decide that, okay, it's time to split this stock up? The number one reason is because the price per share is simply too high. Two stocks that are very high right now that people are talking about as far as when they will split are Amazon and Google. Those two are basically rapidly approaching $1,000 per share. By the time you're watching this video, they've probably already exceeded that. But that's an example of two stocks that many people say are very expensive. Now you have to understand that even though, let's say Google did a 2-to-1 split and the share price fell to $500 a share, even though the value really doesn't change because the market capitalization doesn't change of that stock, a beginner investor may look at that and say, oh my gosh, you know, $1,000 for one share, I only have $2,000. I want to own more than 2 shares of a company, because they don't really understand that that really isn't a factor of how good that investment is. But let's just say for numbers' sake that Google actually did a 10-to-1 split, okay? So now a $1,000 share of Google is now $100. So now they look at it and they go, holy crap, now I can get not 2 shares, but 20 shares of Google stock. So you'll see a lot of beginner investors buy into a stock after they do a split because they see it as a cheaper stock to invest in, and they kind of feel better about having more shares of that stock as opposed to saying, okay, I have 2 shares of Google versus saying, oh, I have 20 shares of Google. So that is one of the reasons that they do a stock split. So basically another reason too is that the share price is beyond the levels of similar companies in the sector. And again, this is just for the fact that many beginner investors don't take into consideration other factors. They solely look at the stock price, and if they see that stock is really high, they're going to want to have more bang for their buck. They're going to think that having more shares is better, so they might want to buy a cheaper stock. So basically this makes these shares seem more affordable to the uninformed or beginner investor, when really the affordability of that stock does not change, because that's based on the price to earnings ratio of that stock, which it has nothing to do with a stock split. So basically, what is the result after we have a stock split? Like I said, it's a very good thing, and investors who hold a stock that basically gets split up, they're very excited, and that's for this reason right here. That's because a stock split often fuels an increase in the price per share. And I'm sure you guys can kind of see the reason why. The reason is that because the stock now seems more affordable, and a lot of beginner investors or people who are on the fence about that stock now decide to buy that stock. As such, the demand for that stock increases, and then the price per share increases as well. And it's also worth mentioning that a stock split is a sign of confidence that the company has in themselves, because they're basically saying, we feel our stock is so overvalued, we better split it up, and they think it's going to continue to go up in value. If they were concerned that the stock would fall in value, they would not do a stock split, because it looks better when your stock price is higher in most cases. But anyways, guys, that's pretty much all I got on this video. This is a stock split in a nutshell. Like I said, if you want to see that video on a reverse stock split, make sure you guys check that out. I'll link it up at the end here as well, so you guys can check that out. But if you guys enjoyed this video, please take a second and drop a like, and then consider subscribing to be notified of any future uploads. And as always, I thank you guys for watching this video.